Good morning, everyone. Good morning. How's everyone doing today? What an incredible event, what an incredible convening. It is such a pleasure and a privilege to get to moderate this incredible panel. Thank you most of all to the incredible Atlantic Council, to the Digital Dollar Project, Chris, right here for bringing us together in this really, really important and very timely conversation surrounding the future of money and digital currencies. One thing to say is that, we've all spent this past week enjoying naps and Netflix and food. A bunch of people who have done none of that are the folks that have organized this truly special convening today. Gabby, Jen, all of the fabulous staff that have made this happen. So thank you all so much to them for bringing us together and for making this panel a reality. So Gabby has given me the hardest and the best job in this whole conference. The best because I get to moderate this all-important superstar panel of experts on the topic of the future of money. And of course, the hardest because I have to download their brains on this teeny tiny topic over the next 40 minutes or so. So if you guys are good to go, shall we start?
Let's do it.
All right, so I'm gonna get very professorial and start cold calling on all of them. We're not gonna do intros, as you'll see. The superstars will make themselves very apparent here. So we're just gonna kick things off and get started. All good, guys?
Yes. Yep. Let's do it.
All right, so let's do it. So the task that we have today is to talk about the future of money and what money is gonna look like in the 2030s. But as we're thinking ahead, as we're thinking forward, I wanted to take a minute just to think about what's happened over this last decade, right? This last decade has felt so incredibly powerful, has felt so incredibly kinetic in terms of how money's evolved. So let's sort of take a minute to think about what we have learned from this last decade. So Carmelle, maybe we could start with you. You are the CEO of EMTECH. You're working enormously and widely in areas around the world, including obviously in Africa. Do you want to sort of kick things off and tell us a little bit about what your experience has been, what your takeaway has been about what is happening with this last decade of innovation around money? What are you seeing that is changing?
Sure. So interestingly enough, one of the reasons I started in Africa was because of the opportunity around financial inclusion, but what that also highlighted are the solutions that have been born out of need of financial services. M-Pesa is a use case that a lot of people are familiar with when it comes to Kenya and how a telecom company ending up not wanting to have its staff travel 8 hours a day to go bring money back home and said, let's top up your wallet and then tell your family to go to an agent in a rural area. And we can convert the minutes to cash for them. That's how mobile money was essentially born, out of a need. And what has happened over the years is just not only the adoption, but it's also the education of how to adopt new forms of technologies, new forms of money, and what that essentially means to have a telecommunication company become your financial service provider. So we've seen changes in the ecosystem as well. But one thing that is clear is that what is happening now is an evolution and the continuance of looking for better financial services, better financial products. And the question that we're having now is how do we continue to use modern technologies to make that more efficient, to address some of the gaps and some of the problems that maybe the first generation, the second or third generation did not particularly address, or capabilities did not exist then. And as research and development has continued, finding new ways of addressing pain points and challenges and making money move in a more efficient way, in a faster way, and now, of course, in a cost-effective way is what we're seeing, especially in emerging markets. So that has been the work. And going into CBDC, interestingly enough, Nigeria, for example, on any given month is the highest country as far as Bitcoin usage. Yeah. And you've seen a lot of crypto use cases emerge from the emerging markets as well. I think it's clear that there's a need and there's a demand for new financial products.
Based on what Carmelle said, Olivier, if I could sort of get your perspective from this transition from the bank to the venture scene that you are now inhabiting and leading. So you started at Nomura in the digital assets division. Now you're working at Laser Digital as a major player there in the context of venture funding in crypto. What has been your takeaway from that perspective, seeing the traditional finance, the banking perspective, bank products, bank-driven payments, to now this world in which you're working, which is investing within digital assets markets where there's a lot of non-bank payment providers as well?
Thanks. So I actually spent the last decade primarily in Hong Kong. And in Asia, the pace of transformation when it comes to payment and money has been incredible. And we've moved from an era where your relationship with your bank was account-based to a completely decoupled era where you have multiple relationships when it comes to payment and money. And for me, there were three takeaways. One is that cash has nearly disappeared from most of the Asian countries, except maybe Japan. Second is that banks are being displaced. Your relationship with money is through various applications, fintech companies, and other intermediaries. And three is I think we're really at the tipping point of tokenization. And tokenization will drive a lot of new interesting use cases when it comes to adoption of stablecoins, CBDCs, or other form of currency. And to go through some of them step by step, I think the biggest transformation has been in mainland China. And I think it's very relevant to discuss that here because to a certain extent, I think maybe the US is lagging a bit behind when it comes to this. When I was going to Shanghai or Beijing in 2012, process was always the same. You change your Hong Kong dollar at the airport, you get RMB, and when you're in China, you pay with your bills, and sometime in hotels, you can use your credit card. And last time I went to China, just before the COVID lockdown in 2019, it was almost impossible to use cash. You were using your super apps, so Alipay, WeChat Pay, paying with QR codes, even with your face in some cases, which is a bit scary in itself. Mm-hmm. And your credit card was, almost never accepted anywhere, only in maybe the most international places. And back in 2019 as well, the Chinese government was rolling out actively the digital yuan. And now they have 120 million wallets in use for the eCNY. They're starting to pay civil servants using the eCNY. We've limited adoption, and what we're pushing through is this partnership between private sector and public sector, where you can use the eCNY now with your Alipay or WeChat application, which are widely used throughout China. So that's point number one. Cash has disappeared, and point number two is that your relationship with your banks barely exists anymore. You pay with your app. It can be your Uber app, your Grab application when you are ordering a taxi, when you're ordering food. But your bank is not present anymore, and it's very hard to see a world where you go back to using fiat and go to a branch and withdraw some money from your ATM. And third point maybe I was going to make is that especially in Asia back in 2017-18, crypto was moving extremely fast, and you had a lot of adoption of course, Bitcoin to allow with modest uptakes on payments, but definitely stablecoins. And stablecoins were widely used to buy various virtual assets, but even payments. There were a few Bitcoin ATM popping up here and there in Hong Kong. And as we are seeing more and more traditional finance companies moving into tokenization, various forms of tokenization from funds, securities, but also virtual assets, you're going to have a need for stablecoins or CBDC to go on-ramp and be able to transact there. So for me, we're really at this tipping point of complete change of how we're going to interact with money in the next decade.
So it's very interesting that you should say that. From the legal economic standpoint, we have two sort of very broad distinctions with respect to money, as we know, which is public money and private money claims, right? So public money being central bank issued money that's backed by the state, the safest form of money. And then you have private money claims, which are issued by, banks, non-banks, and others, wallet providers, app providers, and so forth. So, in the context of us normal people, our interaction with public money has been in the form of fiat, in the form of cash, in the form of, just normal, just notes and coins. And for the most part, central banks have stuck to that. Now, obviously, Olivier, you talked about the Central Bank of China with the People's Bank of China with the eCNY, but in general, it's felt like central banks have not been moving forward from the cash-based form of private money, notes and coins. Why do you see this century or this decade to come as being different? Why do you think that central banks now are likely to move away from that simple model of paper and coin-based fiat money, public money, and perhaps to a more digitized version in the form of CBDC? So why do you think this time is different in the form of central bank innovation? So Carmelle, you're working a lot with central banks in Africa. Do you have any thoughts on why regulators are reacting differently in this decade to come than before?
So this is a very fascinating question, and this is something that we don't speak enough about because the average person wakes up every day and doesn't think about central banks. I know I didn't before starting EMTECH. But the idea of central bank money plays a very unique role, and I think there is an elephant in the room between central banks and private institutions. Private institutions see themselves competing with public money. Every time you go to an ATM machine, you convert your deposit into cash. You take it away from the bank's balance sheet, and now you have it, and it converts. You don't see it, but it converts back to the central bank's balance sheet.
Right.
The question is now, should central banks continue to play a role in the economy by providing a digital version of central bank money, or should they move away and let private money be the main form of money and circulation? I think if you look at history, there is a risk, whether it's concentration risk, counterparty risk, liquidity risk, and so on, that the private sector can fail in a way that a central bank might not. Right? So it's really a risk management, and whether private sector app providers, e-money issuers, banks want to think of it this way, yes, it does impact their business and their bottom line that central bank money continues to exist. And if people want to continue to use central bank money, that they can have a diversified portfolio, but whatever money that you have in cash is not sitting on the bank's balance sheet. That's the bottom line. And they would want more of it to sit on their balance sheet. But I think for the purpose of risk management, I think you're going to continue to see central bank money exist. And what we're really talking about is an infrastructure upgrade of that money. Today we have trucks and vaults and distribution, and a lot of that happens. Tomorrow you have digital vault and a click, whether to issue or remove central bank money from the supply of money.
And I wanted to follow up with you, Ben, based on what Carmelle said. You were coming at it as the GC of Paxos, General Counsel of Paxos, before you were at Square. Are you seeing regulators shift their postures? Carmelle is saying, the infrastructure upgrade is a push here, the desire to create some kind of financial stability buffer with respect to sort of large amounts of private claims, having central bank innovation too start to play a role, for example, in relation to programmable central bank money. Are you seeing regulators respond differently in your conversations around the world as you kind of bring payments innovations to the fore?
I think there really is a change. I think, historically, central banks, there's a tremendous amount of risk associated with innovation, because you think about the power that these banks have to maintain monetary policy, the way it's been for hundreds of years. And if you start innovating, you start tinkering with that, you lose some of the levers that you have to pull on that. And so there's been an understandable conservatism around innovating there. But I think what everyone is realizing is money has become so deeply personal for people that the expectation is that you can manipulate it on a 24/7 basis, you can invest it, you can use it as a form of expression. You mentioned Square. I used to work at Cash App. I don't know if people are familiar. Cash App is now issuing clothing. They have a record label. You would never have thought of a financial services company doing these kinds of things. What they're doing is they're capitalizing on the fact that people see value and money as something that's deeply personal, that they own. So there's been this recognition by central banks and regulators that they need to think about this differently. But I think that the point that was made around risk management is a really important one, which is the underlying assets need to be protected with prudential oversight. And we at Paxos have understood that. We're a 10-year-old company, and we issue stablecoins, but they're prudentially regulated, meaning every single asset that underlies that is held in trust with regulatory oversight. And so there's a world where both of these things can operate in parallel with one another, where you have private money innovation happening in the sort of retail-facing layer, but then you still have central banks in the background providing the stability that everyone knows needs to be there. I think that's the trend that you're seeing. And even the US, which has been kind of the most conservative when it comes to innovating around the US dollar, which is not surprising because it's the most popular financial product in the world, and the risk of innovating there is the highest of any. Right. Even they are kind of coming around to say, okay, we need to figure out how to create an electronic version of these assets so that they can work in parallel with the private money.
So, Mina, I wanted to, based on what Ben said and central banks innovating, I wanted to bring you in here. You are the financial attaché for the Japanese government here in New York. You're working extensively on this US-Japanese conversation around money and innovation. In terms of specifics, what is the Central Bank of Japan doing in terms of CBDC innovation? What kind of developments are you seeing here? Can you speak a little bit to the Japanese experience and the work that you're doing in this context?
Thank you, Yesha. And first of all, thank you for having me this fantastic conference. I'd like to introduce the efforts of the CBDC at the Bank of Japan, as well as the Ministry of Finance in Japan. Let me start with the Bank of Japan. The BOJ published its basic approach to CBDC in 2020. According to this, the Bank of Japan currently has no plan to issue CBDC. But from the viewpoint of ensuring stable and efficient payment and settlement system as a whole, it's important to prepare thoroughly to respond to changes. So based on this approach, the BOJ had implemented the proof of concept since 2021. And then, based on the results of the POCs, the pilot experiment began this year with participation of private sector businesses. And let me shift to the Ministry of Finance. And Ministry of Finance, the MOF is holding a meeting of experts to organize the discussions about the general framework of the CBDC system starting in April this year. I'd like to outline a couple of discussion points at the experts meeting, but please note that the discussions are ongoing and going to be finalized by the end of this year. No conclusion have been reached at this time. The first point is the role division between the Bank of Japan and a private intermediary operator within the CBDC system. So it will be appropriate to have two-tier structures, which means private intermediary institutions will stand between BOJ and users and mediate the transfer of the CBDC. There are also discussions about the additional services in CBDC system, let's say household accounting services or conditional payment services. To encourage the innovation in the private sector, it would be appropriate to consider allowing not only intermediary institutions, but also other private sector businesses to participate in the CBDC. And the second point is the role division between CBDC itself and other payment instruments. Even if the CBDC is introduced in the future, as long as there is demand for cash, the supply of cash should continue responsibly, which means the CBDC could be mutually complementary with cash. We may also need to consider safeguard measures to deter adverse economic and financial impacts potentially caused by the shift of funds from banking deposit to the CBDC. The last one is security and handling users' information as well as other important issues. Of course, the cybersecurity measures and information security measures will be inevitable, but at the same time, it's necessary to harmonize the need to ensure privacy with AML, CFT, and other anti-abuse requirements. Yep. As a next step, based on the conclusion of the experts meeting, the Ministry of Finance will conduct further studies to identify basic concepts and possible options for general framework of the CBDC in cooperation with BOJ and other related ministries. I'll stop here. Thank you.
So that's super interesting what Mino just spoke about. And I think what struck me from Mino's answer is this collaboration between the public and the private here, right? Between having the central bank, but also having, you know, solutions which are private sector solutions to enhance the potential usability of the CBDC and, you know, other payment forms within the economy and payments choice within the economy. So, Ben, Olivier, Carmelle, feel free to join in here. You're working extensively in the private sector, obviously, Ben, and Olivier, you're in the crypto space, and Olivier, you came from the banking side as well. What do you see as being the innovations of the future from the private claim side, from the private market side, that you see as being most likely to get networks just flourishing across the globe? The usability, the acceptability, the, you know, solving that last mile problem, which has really impacted the ability of payment innovations to, you know, get the inclusion focus, you know, realized. So what do you all think is as being that private solution that's likely to win here, to win networks and acceptance and so forth? Do you have any thoughts on that? And, you know, this is really for all of you guys in a different capacity that you're working here.
Right. Go ahead.
Well, I would say without a doubt, it's stablecoin and tokenization. I think if you look at the value proposition that comes from a stablecoin, it's pretty undeniable. It allows you to take, or tokenization more broadly, it allows you to take a real world asset, put it on the blockchain, and then move it at the speed of the internet, which is basically exactly what consumers are asking for today, and also the issue that we have today, moving assets around the globe, is intermediaries, it's slowness, it's non-instantaneousness. So stablecoin really hits on the problem statements that exist in financial services today. The trick is, how do you do that in a safe and sound way? How do you make sure that the assets that underlie those stablecoins are going to be there, or they're bankruptcy remote, they're subject to regulatory oversight? But the reason that stablecoins are so exciting is they're starting to show the real world use cases that people were always struggle to kind of put into concrete terms when you thought about cryptocurrency. I'll give an example that Paxos is pretty excited and proud about. We issued PYUSD recently, which many people are aware of, which is a partnership with PayPal, you know, one of the biggest established payment networks in the world, for a regulated stablecoin. And although PYUSD is kind of early in its stages, we had a really interesting use case recently where we had a user who took PYUSD from their Venmo wallet, which is a US financial services app, transferred it to Yellow Card, which is an African fintech platform, and then put it side by side with transferring that same amount of value through traditional financial institutions. And the recipient received 40% more through stablecoin transfer than through the traditional financial institutions, which is staggering. 40% is like, it's not I mean, I don't need to say, it's such a material amount.
And the speed?
And the speed was 15 minutes versus 5 days. So right there you see this incredible use case for cross-border remittances, which I think everyone recognizes as an area that's really, really tremendously kind of under-innovated in and really challenging for consumers. So that's really, really exciting. You know, you also see opportunities for tokenization around settlement. Right now, you think about payment acceptance, the only real innovation that you've seen in payment acceptance is the card networks. You know, you think about it, people pay with cash, they paid, probably not anymore, with checks, and then with cards. The reason cards have been able to get to the level of scale that they have is because of the acceptance. The network has been able to proliferate Visa and MasterCard globally in a way where people know, oh, if I pull out my Visa card, I can go to any country in the world and I'm going to be able to pay there. But you think about stable coins, and all of a sudden you're in a world where acceptance can be solved like that, because you don't need an intermediary network to build the payment acceptance. Anyone who has the ability to accept stablecoins, which is basically anyone, can all of a sudden accept payment from anyone, anywhere in the world. And so all of the settlement layer that happens between card networks, which many people don't see because it's all sort of disintermediated for the consumer, but there's actually 4 parties in every one of those transactions. It's the buyer, the issuing bank for the card, the acquiring bank, and the merchant. And all of a sudden, you just disaggregate all of those parties, and you've just got 2 people engaged in a commerce transaction and settling instantly. That's tremendously important and also compelling. And so I think stablecoins and tokenizations are going to be the tokenization of all real-world asset is going to be the place that you see really incredible uptake in the next couple of years.
I'll piggyback on that. In the context of tokenization, there are, I think, still questions whether CBDC should use blockchain technology or not. I think what we're seeing are use cases validating the value of that particular technological definition when it comes to tokenization. Being able to take a real asset represented virtually in a way that can be trusted, in a way that can be audited, in a way that can be traced even for the purpose of trust and reconciliation, you can also see how not doing that would be obsolete in 10 years. By the time you roll out a solution, a CBDC that is not tokenized, I think there's a big question around what will that look like? Will that be interoperable with what we know is already coming? And what I like to say is that the reason we're even talking about CBDC is really because of Bitcoin, right? Showcasing what blockchain can do, but also a bit of fear when it comes to Libra coming in, right? We can be honest about that. So if the fear is tokenization and the unique value and properties that blockchain brings, I think it would be a waste of time to say, let's do CBDC, but let's not use blockchain. Then what problem are you really addressing? And some questions come up on, is there really a need for CBDC? We have cash already, or the money is digital already. I think tokenization is very important, but it's going to take time, because what tokenization also means is that the same way we had to build the infrastructure for cards and for ATM and the broad ecosystem to adopt QR code, for example, I think you're going to see some integration into legacy channels, but the infrastructure and the interoperability still needs to be built, right? And that's the journey that we're on now. One, tokenization. Two, being honest about what it takes to provide and support that, with a clear understanding of the benefits and the risks of that. There is a risk of having a 24/7 financial system, guys. There is a real risk. We go to sleep at night and not thinking that anything is going to happen. And then you wake up and the balance that you went to sleep with is still there in the morning. There's a really good chance now that it's going to change.
We don't need any more drama.
So let's get ready. I think it's part of it.
Olivier, do you have anything to add?
Just to add a bit, and echo remittance is definitely a very clear use cases when it comes to stablecoin. It's a no-brainer almost. And tokenization is really picking up. We at Laser Digital in a relatively fortunate position in that we are a subsidiary of Nomura, a global financially regulated institution, but we act as the crypto-native arm for the bank. And so we face counterparties very active in the crypto world, but we talk also to traditional financial institutions and regulators. And the demand for tokenization is real, especially when it comes to, interestingly enough, traditional financial assets, for which maybe distribution is more challenging, instant settlement is not possible, transparency is not there. And so we are active, and some of the clients and parties we work with also very active in moving that goal. And that's the demand. I think that's what's really going to drive demand for stablecoin or CBDC. I'm not sure actually which one is more relevant here. Regulated stablecoin does the job as well as a CBDC, I believe, but you need to go on-chain somehow, because if you're not on-chain, it's not possible to transact. And the way you transact in capital market for those kind of real-world asset and tokenized securities is extremely interesting. You then bring Web3 use cases to this world. You provide ability to offer liquidity through automated market maker. And so you can provide a lot more asset for which you can offer a price. And then if you add AI on top of it, you have the ability to create new assets, digital native asset using artificial intelligence, but also importantly use AI to make sure that you reduce your risk when it comes to cybersecurity, you improve the auditing of a smart contract using technology. So I think the confluence of those two trends is going to be extremely important and is going to drive a lot more, again, either stablecoin, regulated stablecoin, or CBDC. I think it's interesting maybe to have a debate around which one offers the most value for financial institution. For us today, there's no CBDC, so there's nothing to transact on, but we need a way to go on-chain in a safe and compliant way. So the likes of Paxos and Circle here are playing a key role. But if you're not able to do that, a lot of the efficiency that you'll get from Web3 models will be difficult to achieve.
So it's interesting, the conversation that we've had so far, which focused a lot on CBDC, we focused on stable coins, primarily from the crypto space. What about crypto more broadly outside of that context of just stable coins? The question that everyone is asking with everything that's been going on over this last year, does crypto have a future in payments? Carmelle, you mentioned Bitcoin as being this animating idea, even behind CBDC. What do you think is the future of crypto more broadly? What kind of contribution does that have to make? And Mina, I want to get you in, as that conversation progresses on the regulator's perspective here, in terms of what role the regulatory system can play, to flourish or otherwise to guide the development of crypto. So, Ben, perhaps, in the space that you occupy, what do you see as being the future of crypto? Is there a future for crypto in 2030? What will it look like?
It's a hard question. I think that that Bitcoin really set a standard for transferring value, which I think continues to endure today. And then you saw sort of an evolution of that with Ethereum, where you had an efficient tracking and transfer of value, but then you had the ability to then add programmable smart contracts so that you could do so in a very specific context. And there's a real value proposition that's been shown by, I'll say, those two assets in particular. But then what you're starting to see is that there are other blockchains that have other value add propositions like Stellar, Solana, things that have higher throughput, are allowed to sort of, I would say, evolve those original use cases into something more effective. So I still think that there's value there, but if you zoom out a little bit, I think what crypto has shown is that people want control of their assets on a 24/7 basis. They want to remove intermediaries from that value transfer, and they don't want sort of financial services to exist within a walled garden. And so I think that's a movement that absolutely is going to continue. Whether or not specific assets are going to endure, or whether or not, kind of what form they take, I think is hard to say at this point. I think Bitcoin has shown that it's quite resilient over time. I think Ethereum certainly has entered the mainstream in many ways and is now regulated directly by the NYDFS and others. So I think the regulators need to play a big role in kind of overseeing these assets, making sure that when they do get adopted by traditional financial institutions, that they're done so with oversight. But I think the kind of ethos of crypto and the shift of control and ownership of money away from a system of kind of very few intermediaries to a more democratized version of finance is going to be what endures going forward.
And so, Mina, what do you think about that? Ben spoke of this world without intermediaries or fewer intermediaries, very global. What's the role of the regulatory system here from your standpoint, as someone that works in that, from that standpoint?
Thank you, Yesha. Let me introduce regulatory initiatives to crypto assets and stablecoin in Japan. So last November, the major crypto asset exchange, FTX, collapsed. And this shook the confidence in the crypto asset industry. And I think it highlights once again the importance of the regulation to protect customers. And I think internationally there is much interest in strengthening the regulatory framework. But Japan already had a regulation in place, including strict segregation of customers' assets. Therefore, even after the bankruptcy of the FTX, it's Japan's subsidiary, FTX Japan, successfully protected customers' assets. And the customer have had access to their funds since February of this year. I think currently we are in a difficult situation, also known as the crypto winter. And it's also difficult to predict future trends. But I personally believe that in Japan, sound regulation has created an environment conducive to challenging Web 3.0 innovation.
Wow.
In Japan, a law of stablecoin was also introduced in June of this year, allowing banks and other financial institutions to issue stablecoin. One of the purposes of the law is to protect customers, enabling institutions to meet redemption requests from their customers through preservation of underlying assets and segregation of customers' assets. It is reported that some regional banks are planning to issue stablecoin. One of their background is to create a cutting-edge cashless payment region. And another financial institution is considering to use stablecoin for business-to-business payments.
Yep.
And from more broad perspective, improving the efficiency of Japan's society is quite important for us because we are facing aging society and Japan's population is declining.
Yep.
And the Japanese government want to be open to innovation with emphasis on dialogue with their industry. For example, when there are questions about regulations in Japan, Financial Services Agency in Japan has support system in place, including help desk, which provide free regulatory guideline to clarify the regulations. There's also a sandbox system where firms can test their innovative idea. Yeah, thank you.
Japan's making the rest of us feel really bad. So, so we have 3.5 minutes, and we've got 4 of you. Let's kind of end on this note of the, futurizing. Let's look to the future. Let's, be futurists for 3 minutes. What are you guys most excited about for this next decade? What big development, regulatory policy, innovation, what are you most jazzed about for this decade to come in payments, and why? How do you see our world changing through payments? Your 1 minute hot take.
I'll start. So I think by 2030, we'll be in a world where you'll access your online account using a digital identity that could be represented by a non-fungible token or something similar like this. On your wallet there, you'll receive maybe your, depending on countries, your UBI, your universal basic income from the government directly in the form of some kind of CBDC. And then you'll change that for a crypto asset and transact in the metaverse and buy, sell stuff there. And I think that's potentially a world where by 2030 we'll see maybe different trends happening there.
Awesome.
I mean,
Carmelle?
I think it's not as impossible as we might think. I personally believe that everyone deserves access to an inclusive and sound financial market. Money impacts everything in our lives, and everyone deserves access to that. How do you make it inclusive? Being able to use, like we said, tokenization and building infrastructure that makes that possible, where someone, even without a bank account, can access good financial products.
Yep.
That's definitely one goal for me. The second is it needs to be sound, and what that means is regulatory environments that not only protect consumers, but also understands that there is a need for innovation for finance to be inclusive. So that combination is really a space that I'm spending a lot of time on and working with regulators on. How do you develop, how do you leverage technology to enable you to be a better regulator in balancing innovation and regulation?
Yep.
I think for me it's platform and asset interoperability. So like a world where I can send you money from a Paxos account to your JP Morgan account, and that all happens seamlessly because blockchain underlies the technology. And then when we want to engage in some kind of a transaction, I send you a token for gold in exchange for a token for a share of Apple that you have. That, I think, is a very exciting world. Right now, that's completely impossible because of the way that the intermediary system is set up. But when you have asset and platform interoperability, you give people just a tremendous amount of freedom. And I think you open the markets to your point about sort of giving people the ability to really build wealth and transact in the way that they want to, not on the terms of the institutions, but on the terms of individuals, that I think is an incredible future.
Mino, you have the last word.
Yeah, that's right. And digitalization has advanced at home and abroad, of course, in various areas, including the field of the payments. In particular, I think the expansion of the cashless payment is remarkable. I think this trend will accelerate rather than reverse in post-COVID-19 era. And in Japan as well, more devices such as smartphone and IC cards are available for the payment, as well as many fintech firms have become involved in providing cashless payment services. I personally think that the cashless and digitalization of the payment are going to be more and more penetrating into the lives of the Japanese public.
Incredible. I told you guys these guys were awesome. Thank you guys for this incredible conversation that we had. Thank you all for listening, and I'm going to hand it over to our next fabulous panel. So thank you guys so much.